We have to start off today's video with the absolute major turn of events we have had in the past 48 hours. Now, if you have not checked the prices of crypto and just looking at it, or if you're just watching this video, you might have been absolutely shocked considering the bloodbath, the crypto crash we saw in the past 48 hours. Now, I have been in the world of crypto for many years, and there are only very few instances in which we have seen something as major as what we have seen in the past day. So I am going to start this video by explaining to you guys what exactly happened, what caused this major crash. Now, it all starts off with a crypto exchange called FTX. I'm pretty sure if you have been in the world of crypto, you know about this because it is one of the biggest crypto exchanges in the world. I think in terms of trading volume, it was the third largest in the world. Now, to understand the crash of this, you have to know about this guy called Sam Bankman, who is the CEO and founder of FTX. But to even understand that, you have to go back a couple of years back in 2015 regarding another company called Alameda Research. Now, Alameda Research is basically the first company of Sam Bankman, and this company is basically a hedge fund trading within the world of crypto, and an extremely good one at that, and they have made a ton of money. Now, there was one problem with Alameda Research, and that was that they simply did not have enough liquidity to do their trading, their arbitrage trading, basically getting Bitcoin and buying Bitcoin on one exchange and sell it on a different one. So they did something within the Japanese premium called the kimchi premiums, as a separate video. But anyway, the issue was that they did not have enough liquidity. Now, to get liquidity, Sam Bankman created the FTX crypto exchange. Now, what follows events are absolutely crazy, because the more I read about it, the more I just simply cannot believe what we saw. Now, to understand this, we have to look at one very important thing, and that is how they got their liquidity. Basically, a couple of days, about 4 or 5 days ago, Coindesk published a report, an article showing the balance sheet of Alameda Research. Now, keep this in mind, Alameda Research is one of the most profitable hedge funds within the world of crypto. They had something around $14 billion worth of crypto on their balance sheet. But after this Coindesk report got published, everybody found out that it was majorly hedged, basically using the FTT token which FTX created. So FTX was creating this token out of thin air, and Alameda Research was basically at early stages. They got a pre-mined version of FTT token, and they were using that FTT token to borrow real assets from users who had deposited actual Bitcoin, Ether, a lot of different cryptos to FTX. So in very simple words, we have basically FTX creates the FTT token, Alameda buys or pre-mines FTT token at incredibly low prices, and then FTX pumps FTT using various methods such as giving different levels of trading fees. The more FTT token you hold, the lower the trading fees will be, and a lot of things which a lot of other exchanges do. There's not a problem with that. But what they did, Alameda Research did, was basically they used the FTT token as collateral and borrowed real assets, fiat currency, and other cryptos for their own purposes, basically taking real users of money out there. And the ignition, the fire that started this was basically CZ, who is the Binance CEO. They got to find out, and they also got to find out that Bank Friedman was going behind their backs and kind of saying a lot of bad things about DeFi, and this is something a lot of people didn't really like. And this is when CZ tweeted out saying that they are going to be selling their FTT token, something worth around 500 million plus, and that started the fire. And basically everybody realized, hey, their tokens on the FTX exchange are not going to be, they simply do not have enough liquidity. So people started jumping onto FTX, taking out as much liquidity as possible and selling every single token they had and trying to get that money out. And as you guys can realize, when majority of people, especially on one of the largest exchanges in the world, do that, it is going to push an enormous selling pressure on the prices of crypto. And that is what we have seen in the past 48 hours. Absolute bloodbath in the world of crypto, which is absolutely crazy. In fact, we saw the price of Bitcoin drop below the $16,000 mark. I think the lowest price was 15,700, or maybe by the time you're watching this video, it might have dropped even more. So as you can imagine, basically this was almost a scam. Now I don't know what the definition is going to be. SEC has announced that they are going to be conducting an investigation into FTX and the collapse of FTX, basically because at this point FTX has or is going to declare bankruptcy, or by the time you're watching this it has already declared bankruptcy. So absolutely crazy turn of events. Wow, that was crazy. With all of these major events going on so far in the world of crypto, such as people not being able to withdraw their crypto from FTX, and a couple of months back it was Celsius, it is a good time to remind yourself of the mantra of crypto, and that is not your keys, not your crypto. So it is very important that you don't keep a lot of your money, a lot of your crypto on exchanges. It is very important to keep your crypto in your own wallets, whether that is a hardware wallet or within your own computer. So it is a very good idea. But for those folks who don't want to deal with the technical difficulties of that, I will be making a video on exactly how to do that. But still, if you want to keep your crypto on an exchange, it is very important to know if the exchange offers something called a proof of reserve. Now there's one silver lining so far of these major events in the last 48 hours, and that is 9 major crypto exchanges including Binance, Hubei, Bybit, and a lot more. They have announced proof of reserves, which basically is a cryptographic proof saying that your assets are actually backed one-to-one on their exchange. So it is very important to have that, and a lot of exchanges have said that they are going to be implementing that, which is a very good thing. Now there are already other exchanges out there. The one that comes to my mind is Kraken. Kraken already offers proof of reserve. So if you guys do want to keep your crypto on an exchange, make sure that that exchange offers proof of reserve. Now moving on to Ripple and XRP, and as you can imagine, it has impacted the price of XRP massively, just like any other crypto out there. But this impact on XRP and a lot of other crypto coins, it will be felt for quite some time, but in the long run they are going to go and stabilize at a certain price point. Now nobody can tell you exactly what price point it can be, because it's the world of crypto and things are absolutely crazy, as you have seen in the past 48 hours. Now talking specifically about the Ripple lawsuit, there was another lawsuit which was going in parallel with the Ripple lawsuit, and that was the library case, and which SEC brought against the LBRY token. And unfortunately for that lawsuit, library, they lost against the SEC. Now ever since the news came out of library losing the lawsuit, a lot of people went and immediately jumped on the Ripple bandwagon and said that, hey, can this happen to Ripple? And very likely so, it can happen. But a lot of attorneys within the Ripple XRP community, they came out and said that, hey, the way library approached, especially talking about an investment contract, and the way the investment contract is satisfied through Huawei is very different from the way Ripple is coming forward. And especially Ripple is going to be using those important William Hinman documents and talking about the summary judgment. In the summary judgment, talking about basically how they were not given enough notice, talking about the fair notice defense, and talking related to the library case did talk about the fair notice defense, and on that they lost, which was very surprising. But again, that case, even though it is within the same realm, within the same universe of the crypto world, it is still different from how the Ripple lawsuit is playing forward, especially in considering the victories we have seen with the Ripple is still in the upper hand. Now talking about the major updates coming for Ripple, and that is the 30th November. That is when both sides, Ripple and the SEC, they're going to be filing their final summary briefs. And on 5th December, it is the day when the public gets to see those reply briefs. So the 5th December, it's a very important day, and the 30th November as well, because anytime after the 30th November, the judge can technically give a verdict on the summary judgment. So again, very important weeks coming ahead for this Ripple lawsuit. Well guys, that was the video for today. Let me know what are your thoughts regarding the past 48 hours of the world of crypto. I would love to know your thoughts in the comment section below. And as always, if you're new to my channel, consider subscribing, and I will see you next time.